Gold and silver both yet again traded bearish for the day. Gold has achieved the lows at around 1914 levels and silver has got the support at 2260 intact. One interesting thing to observe here is that the move in silver was comparatively less volatile and more stable when compared to gold yesterday. This suggests that somehow both the metals are trying to find out a bottom here and trying to trade with the support level. So what to expect today? Big day today. CPI data coming in from US in the later in the day definitely is going to bring more volatility in both the precious metal prices. So what to expect, how to profit, which position you should take, we will see with the help of charts and indicators. This is the first update for the day. The next update will be released before the CPI data. Do watch that also. That is very critical. Also, and hence press the bell icon which keeps you updated. You can also join my free Telegram channel in order to get the live updates, and your every comment, every like is a great motivation, and do share, subscribe as well. This is also great support. With that, let's start. First, we'll look into gold followed with silver. Do watch till the end. On the hourly charts, if you look at, see, prices were too much divergent from the moving average. They are tried to converge, which is right now situated at around 1920 level. Now, this is 20 period exponential moving average. If you look at consistently, gold has created lower lows, then retracement, then lower lows, then retracement. Now, it is still on the path of retracement, but if you look at, see, last few candles, you can see lower lows, higher highs. Now 1920 is the level above which you can initiate a buy. However, 1924, 1925 zone, which was the first support levels which we have seen earlier, is going now to be the resistance level. 1924, 26 rather, I will say. This is the first resistance on the upside, and then 1932 will come into picture. Beyond that, we may see bullishness in gold, and it has to break past 1936-40 zone in order to confirm the reversal. Only and only if gold stays above 1940 any point of time, you can treat that as a reversal, and then beyond that, this is definitely going to stay bullish. Till 1940, we have to remain watchful, cautious, alert. It can show you good swings. Now, if you just divide it into two halves, you can see almost symmetrical formation as of now, but yet sideways. So the next candle I will definitely wait and watch out for if it tries to march till towards 24-26 zone. Right now, gold is not showing any momentum here. Right now, gold is not showing any strength here. Now look at the beauty. The stock, see, just fewer green candles and the stochastic is back to overbought zone. But interestingly, MACD, you can find out MACD was trading with a fat belly here. It has just crossed over, and this suggests that possibly, see, there are a couple of peaks here, and possibly it could retrace a further upside. RSI was also extremely oversold. It has come out of the oversold zone here. Coming to 2-hour chart, on the 2-hour charts, all the 4, 200, 150, 20 DMA are, or not DMA, but period average are trading with divergence. This is a bearish sign for gold here. At the same time, now look at 2-hour charts here. Yes, it is also trying to create symmetry. I will observe about 1920 levels. Possibly, we may see 24-26, which is a great resistance, and then 30-32 levels will come into picture. Stochastic is oversold, trying to rise from here. MACD is bearish, trading with divergence. Possibly it could converge and can cross over. Now, if you look at gold here, see, first of all, just look MACD from here. Almost the highs are well connected, the lows are well connected too. Now, this time, last three lows, you can see it is finding a bottom here. So at this zone, we have to watch out if it converges, crosses over and moves on the buy side. Right now, it is still trading bearish. See, RSI is also oversold here. It may come out of the oversold zone. Coming to 3 on the 3-hour charts as well. Yes, lower highs, lower lows. So lower highs, higher lows is what you can see here. We have to wait for it to break past the highs of this channel, and then there could be a little more bullishness, and hence I recommend you to buy at 1920 levels. But then we have seen the resistance levels on the upside. Stochastic here is oversold on the 4-hour, 3-hour charts. It has to come out of this. The MACD here is also bearish and trying to converge a bit. If you look at the RSI, this is also oversold. Coming to 4-hour, now on the 4-hour chart, see higher lows, higher highs here, and you can find out, see, previous candle prices failed to keep bullish. It tried to rise but then got a pullback. Now this candle has just started. Possibly it could achieve little highs, but now see, this is a Herculean task for gold to break past by, and hence we have to just watch out first at 1920 and then 1924-26. Only above 1924-26 little more bullishness may prevail here. Now the 20 period moving average is little far above, hence it may take a few more candles while the gold price reaches here. The moving average may come down here, and then after touching this zone it will decide which direction it wants to take, possibly on the downside or on the upside. Stochastic here is oversold. The MACD here is also bearish, trading with divergence, trying to converge. RSI here is also oversold. Coming to the now, since the drop is what on the near term time frames, we cannot see the lower levels. We will try to find out on the daily charts here that if it goes on sell, which position you should take and at what levels. Now first of all, look at the moving averages. These are divergent. These have crossed over. This is a bearish sign here. All the moving averages have started to look downwards. This is again a bearish sign. Now if you look at these candles here, you will find the greatest resistance lies at around 1945-50 levels on the daily charts, and hence on the daily gold has to break past by 1950 levels in order to stay bullish, in order to stay in the race for a rise or a reversal. So these levels, yes, also if you look at the prices are too much divergent from the moving average. This calls for a little conversion here. Conversion means the movement of price on the upside while moving average looks downside. Now what I mean to say, see here also these were divergent, it has converged, the price is converged. Here also it was divergent, it has converged. So it is just swinging across these moving averages plus minus levels. You can see this very clearly, and hence right now this divergence again calls for a little conversion or little movement on the proximity. Now if you look at the daily charts, you will find, see, lower highs are consistently getting created, lower lows are consistently getting created. So on the upside, as we discussed here, 24-26, yes, it's a great resistance, and then 32. If it breaks past these two, you can expect that we are definitely going to look forward to 1940, then 1946 50 levels will the next stronger resistance zone. So there are hurdles for gold on the upside, but then you have to be careful and watchful. Yes, we have seen three red candles in a straight movement here. Now in general, this is a pattern of three candles, and in general after three candles generally there is a greener candle which we have seen in the past. However, this is not something which is hard and fast, because see, a drop this time is going to be a sharper one. Also remember, this is trading at the bottom of the Bollinger Bands, and hence even if it tries to stretch the drop, there has to be a pullback towards the close. Now why I am saying so, see, whenever it tries to stay outside Bollinger Bands, it always got a pullback. You can see or check history here on the daily charts. See, in fact, this time it traded outside Bollinger Band. See, the stretch was far and high, but then it has got a pullback. So, and right now, if you look at, see, previously on this candle, the bottom was here. It has got the room for it to stay green. It is stretched outside Bollinger Bands. However, a pullback is must. And here also you can see a pullback is almost certain, and hence that is why I say this is precisely trading at the bottom. You will, in historically, you will find very fewer incidences when on the daily chart. See, this is the incidence where on the daily charts it stayed outside Bollinger Bands. So chances appear to be less that it stretches its downward movement. However, we have to be watchful. Now also one more thing, see, again and again I am saying this is the consolidation zone between 1910 1925, and this zone becomes very important for gold. Right now it is trying to get the support at around the same zone. 1910 is a great support. 1910 1908 is the great support here for gold. It can try to breach, but then a pullback is certain, and this zone is very important. Below 1910 1908 1900 is the greatest support, and it can try to touch before looking forward to a pullback. This is also very much possible. If you look at the daily stochastic, this is oversold. The MACD is still divergent, bearish here, and it has a room on the downside. It can continue with the downward move. However, see double bottom, first wave, and a conversion from here will lead to a second bullish wave from here, which may yield the prices higher on for gold. RSI is also looked downwards, now can try to see an upward move. Considering this, I will recommend you to buy gold at 1920 levels for the day. The stop loss you can keep is at around 1914. Till 1914, the bearishness is, uh, I will say, not there. In fact, I will still see a pullback even if it tries to touch 1910. So beyond 1920, 24, 26 is the first zone you should look out for. Then 31, 32 levels, that is the next resistance. Then 36 to 40 itself is a completely great resistance zone, and then 46 to 50. Four hurdle zones are there for gold to pass by. Any move above 50, just close your eyes, stay long. Gold has reversed, it is going to fly high. When I say stay long, means stay long beyond 1950, it is not going to look back. On the downside, below 1914, there will be little bearishness. It may try to touch the first support zone at 1908, 1910. That is a very strong support zone. And then 1900. These are two very, very critical levels. Below 1900 is where more bearishness is going to prevail. Take your positions accordingly. And below 1900, we can again look at 1895, 1891 level, the previous bottom which we had seen for gold in the recent time. Take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Now let's have a look at silver. And before we proceed, if you want to learn this art of trading, you should join my mentorship batch. The 25th batch is going to start on first week of September. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now look at silver on the hourly charts. On the hourly charts, if you find silver, it has consolidated enough. 20 to 65, 20 to 60 zone. Again, a great support for silver here. It is just consolidated within this zone. And we know 2280 is a great resistance here. So yes, once you see it trading above 2280, one can initiate a buy. However, one must note that it is only if you see silver trading above 23 where little more bullishness is going to prevail here. So this is one point you should note. At the same time, on the downside, yes, if you see it trading below 2260, when I say 2260, eliminate the spreads and see the check the selling price here. Only below 2260, this price should be 2260, below which you can expect little more bearishness. So in between 2260 and 2280, we have to observe, we have to watch, we have to note how it behaves. Now look at the hourly charts more closely. See, price is not willing to stay bearish. We can see this from this moment here. At the same time, upside is very limited, and hence it has to break. On the upside, the moving averages have to converge. Now on the hourly chart, there is too much divergence on the moving average. Possibly a little conversion is expected, which means a little reversal can be seen. Stochastic looking down, MACD is trading with little divergence and bullishness. RSI has come out of the oversold levels. On the 2-hour charts, if you look, likewise on the 2-hour charts, similar observation here. This is still a retracement till the time it stays below $23 levels. It is should be still treated as a retracement. Yes, we can initiate a buy at 2280 levels, but then 23, 2320 are two resistances, and then 40 to 60. This is the greatest resistance zone which silver has to break past by. It is not a big deal for silver. Once it starts moving, it gets ruling, and we have seen massive moves on silver, and definitely the CPI data is one such trigger for it to give that move. Now see, stochastic started to rise here while the MACD is still trading with little divergence. See, double bottom here, but the slope here and here is almost different. Still it is trying to retrace a bit. RSI almost has come out of the oversold levels. While if you look at 3 hour, on the 3-hour charts, all the four moving averages 200, 150, 20 all trading with divergence and bearishness here. It has to surpass each of these levels in order to confirm the reversal here. Right now, another observation on silver. After staying bearish for long, you can see sharp bearish moves here. Now the bearishness somehow has got diminished here. Yesterday we have seen silver giving lesser violent or lesser volatile moves compared to gold here. Gold was trading with more volatility while silver was almost stable here. Hence, we can possibly expect a retracement. We can possibly expect a reversal here. Stochastic is oversold. MACD has crossed over, trading with divergence, trading bullish here. You can see this. It is almost, see, look at the waves here. First wave, second wave, third wave. Now this wave is almost has flattened here. Certainly you can see it is almost flattened here. So possibly this could call for a little reversal. RSI is oversold again, and we will see how it behaves now. On the 4-hour chart, the prices are too much divergent from the moving averages. You can see higher lows, and still it is to be treated as a retracement only till 2320 levels are breached. This is the zone where we can see maximum resistance, and then 40 to 60 levels. So yes, there are good resistances here beyond which it will turn bullish, and we can see more good bullish move on the upside. Now let me show you something here. See, first of all, you have to draw and you can say align the bottoms here. These are the lows. If you draw the lows, you will find this line. Then you have to draw the highs here. Now this is the channel in which it is trying to trade. It has achieved the bottom. Now the highs of this channel is at around 2360, 2380 zone. So yes, there is a possibility for silver to retrace. It can try to achieve these levels, which are great resistance. Stochastic is oversold. MACD is extremely bearish here. It has achieved the bottom and looking forward to a crossover here. This crossover coming at minus 20 levels possibly can show a little reversal here. RSI is also extremely oversold. It can come out of the oversold zone. Coming to the daily. On the daily charts, moving averages are far above, stationed here at 2380, $24 levels. Yes, these are crossing over here. These have crossed over here, and this is a bearish sign. At the same time, if you look at the bearishness on the candles, first, second, three candles, body size is getting smaller. Yes, the bearishness is got diminished here. Second is it failed to stay outside Bollinger Bands. It has got very good support here. Also, if you look at, see, first of all, the slope here and here has certainly changed. It has started to trade with more bearish bias. Second is, this is the breakout zone. It has completed the journey till the breakout levels here. And still it has got the support at 2250 and 2240 as a very strong support. Only below 2240 is where little more bearishness will prevail here. That is the point you should note. Now see, diminishing bearishness, resistance here at 23. Beyond that, yes, it can try to fly high. Stochastic here is extremely oversold. The MACD here is trading with extreme divergence and bearishness. RSI is trading at bottom. So this calls for a little more bullish move in silver. Possibly it could show you a reversal. However, we have to wait and watch how it behaves. If it drops below 2260, that is the point where you can initiate a sell entry. However, remember, again, it is outside the Bollinger Bands. Whenever we have seen an outside Bollinger Bands move, it tries to pull up back in the zone, and hence below 2260 you have to be careful for 2250, 40 levels. These are two very near support zones. Then 2220 levels. Only and only if it breaks below 2220 you can expect that further bearishness is going to prevail, and hence you have to trail your stop losses on the downside. On the upside, likewise, you have to wait for it to break past 2280, $23, 2320, three very critical zones. Then 2350, 60 levels, and beyond that possibly we can see it trading extremely bullish and breaking past 24 also. Anything and everything is possible. These are markets. Take your positions accordingly. Trade with the stop loss, trade with the trailing stop loss. Do like, share, subscribe and comment. Do press the bell icon. Your every like, every comment is a great appreciation, great motivator for me. So please do like, do comment. Thank you very much. Have a great profitable trading day ahead. Thank you.